All right, traders, welcome to the Tribeca Trade Group weekend video. This is Christian Fromhertz, and we're going to go through a couple setups and some of the major events from last week, and and where I think there's opportunities in this market and things that you should look out for Monday. So let's start with the performance last week. How bad did we get beat up last week? It was pretty widespread. One thing that kind of noticed this week was, just as everything, there's been such a big global rally over the last year, where a lot of things rallied, not just in the U.S. And I guess really, if you want to look at the performance over the last year, the U.S. has actually trailed. But there was nothing that really, besides just a couple, smaller areas around the globe that managed to fare a little bit better. Really, everything kind of went down in terms of equities. So SPY was down 5%, small caps were down about the same, the Qs were down about the same, emerging markets, both emerging and developed international markets were both down over 5% last week. So there just wasn't a lot of hiding places. So even if you had a diversified portfolio in equities, there really wasn't much. There really wasn't much areas that you could hide last week. They pretty much all got hit pretty hard. So, and you could see this further if we break it down by sectors. And I apologize, I am on my laptop, so you're going to hear a lot of tapping on the laptop, which I apologize, but you could see retail was your best performing group, right? XRT. Energy really got walloped. The commodities got extra smoked last week. OIH was down 11%. Robotic stocks, which with the help of what was the one name that got beaten up, but nevertheless that group down 7.5%. iRobot is the name I was thinking of. Solar names got hit pretty hard. Even the gold miners got hit very hard, and then your higher beta areas like Chinese internets were down 6.4%. Okay, and then even in international land, the only thing that really held up, which was positive out of like my watch list that has over 40 different countries and areas, was India, which was basically flat last week. So nice outperformance there, some nice strength there. You could see ASHR, which is Shanghai, really risk off there as well, down 10%. And I think that's the phrase of the week last week is risk off. So, we could go through and spend some time on talking about the reasons. Things kind of just it was a little bit of a domino effect. I think yields started to go up. Then, you started to see cracks form about a week ago in some European equities. The DAX was one of the first things that I saw that went down. And then it was the whole, volatility trade that blew up last week. So, these things, they kind of spread from area to area. So what to watch, and I don't want to go over. I don't want to spend 15 or 20 minutes on all those things that possibly were the cause. But I want to talk about what to watch for next week. All right. So what did we see in fund flows, and this I think will help a little bit. You could see that there was $30 billion of equity outflows last week. Interesting, that was all in the U.S. None of regardless of international areas going down, there really wasn't a lot of outflows happening in international equities. It really, you could see by the biggest outflows of last week, it was really the SPY had $23 billion of outflows. Now Qs, and SPY is the largest equity ETF out there. So it's going to, because it's so large, the numbers are going to be more dramatic, right? Because it's so much larger than any other ETF. But, the Qs had outflows as well. And so really, one of the things I think to watch for next week, if and clearly what we saw last week was there was a big seller out there, whether it was one or several, and what we kind of noticed throughout the end of the week was that seller was still present, and you could just basically look at the amount of volume that was occurring last week in the SPY ETF. So on Monday, if we come and we see that the volume is over 2 times the 30-day volume, then that seller is still is still active and is still out there pressing pretty hard and liquidating. So if we come in and we see that the volume is like 20 or 30% higher than normal, I think that'll be fine. But really, once we start to see double or triple volumes in the SPY, then you know that the selling is not over with. So obviously, things kind of changed a little bit last week. One of the things that we noticed in the trading room, and this is what I kind of, the value that I really, bring traders is picking up on things that others are not. So one of the things that we noticed was the VIX, right? So, this is a must. Unfortunately, it's a must watch right now. And what we started to see was right around 12 o'clock to, I think it was right around 12:20, 12:15, 12:20. We saw this move from 37 to 40 in the VIX, and it was like, oh geez, we could have a repeat of what we had on Thursday, which was a big end of day sell off. But notice, and just remember this 12:15, 12:20 is where we went from 37 to 40. And if you bring up the SPY chart around that time, again, I said 12:20 to 12:40. So right around here, notice we didn't really take that big leg lower. What's been happening recently is when the VIX spikes up, equities go lower, and we did not. They did not confirm one another on Friday. So once I started to see that, and I was like, wow, SPY should really be picking up downside momentum as the VIX goes from 37 to 40. Again, very heightened level. We did not see that, and it kind of gave us a little bit of a clue that these are not confirming one another. Hey, we got a chance to things might actually reverse. So when things that you notice normally confirm one another and they start to break apart, and they don't confirm one another, then something is different, something has changed, and that's what we were able to make some money at the end of the day on Friday as we saw this big move up. The other thing is using the value areas really helped as well. We were trying to get into value basically all day and on Friday, and we just couldn't do it. We just didn't have the momentum to carry us through until the end of the day. And you could see a couple of times here, we started the day, we went lower, we came back and retested, we weren't ready to get back in there, and then through the end of the day, we managed to get into value. So definitely turn the corner. And then if we look at the charts in the S&P, I think everybody, I'm not going to spend that much time on this, but definitely some good things came. A lot of hammer bars where basically you put in a low at some point during the day and you rally back through, and we actually closed higher than we opened. So, that's a good sign. Does it mean that the bottom is 100% in? No. But it's definitely at this point, we saw this as well on what was this Tuesday, and we ran into overhead resistance and we fell back down. So, I think watching SPY volume, I'm going to talk a little bit more about the VIX is something to keep an eye on for Monday. But I would say, great to see us come back. I'm very excited that we did not capitulate. But I don't think I don't think that we're out of the woods in terms of the price action. I think the VIX, one of the things that's going on right now with the VIX is what you call backwardation. So, what does that mean? And I'm not a VIX expert. I talked about this a little bit in one of last week's videos, but you have two different ways that the VIX and futures can price: contango or backwardation. Contango means that it basically is a normal market structure where your front month is a little bit cheaper than your further out months. So front month is your expiration right in front of you, and then as you go out further in expiration, those prices are more expensive, right? And that's a usual market because there's time value. So the further out you go, those contracts should cost more. However, when we've got something really unusual going on, what happens is you have backwardation where the front month actually costs more than further out months. And that's what you have right now. Now, that did compress a little bit, but the VIX February contract expires next week, and you can see how it's 27 versus the March contract, which is 20. So it's really screwed up, I would say. There's a lot of fear in the short term, so the front month contract is cost more right now than it does for March. Once these things flip around, once you go from backwardation to back to contango, the normal market structure, then you know that some of that really worrisome markets have settled back, right? So we're not there yet. So that's really what you need to see is more of a normal market structure where we don't have backwardation anymore. So that's something to watch for Monday. I would say also, just going back to some of these charts, and again, great to see that we held major support, which is the 200-day moving average, and that we've got a major dip to put some money back to work. But I would also be watching the Asia markets and Europe as well. So if we look at the DAX or EWG, this actually came back on the 200-day moving average as well. EWG, this is in U.S. dollars, but the DAX where it closed in their time 11:30. It basically closed on its lows. So EWG will continue to trade in U.S. hours. So their futures got a little bit of a bid back. But really, what I want to see is for those local markets to do something, different than what they did last week and rally and have some green. Again, because it's a global market, just because our markets recover. It has to be global at this point. So really, I'm watching, really curious to see what happens with Asia markets. If they rally big time tonight, which is Sunday, then I think that's a good sign for the market. So that's one. Two is the VIX needs to go from backwardation to contango. And number three, we'll watch the SPY volume. That'll tell us if that big, whoever's doing the big liquidating, if that's through. And then, of course, the support levels. The 200-day moving average, we could go, not only, I've looked at both the S&P as well as NASDAQ, and you could see that NASDAQ's a little bit stronger. We didn't even get down to the 200-day moving average. Small caps are another one to watch. That's that. I would say one other area to watch, of course, is Treasury yields, right? So they hit 285 in the 10-year. If that happens to move forward, if that happens to go up to 3, volatility could stay with us for a little while. And it's been the speed of the move, right? So if we just settle in around 285, I think that's making progress. But I actually have these as the charts to watch. I mean, look at what happened with the LQD. This is investment grade bonds. This really broke down last week, had the biggest outflows ever on record for this particular ETF. Really a lot of outflows there. Same thing. So this was over $1 billion of outflows. Same thing with EMB, emerging market bonds. Now these I think will stabilize if the yields don't continue to climb. This is what the 10-year looks like, which is at 2.85. Notice that which is the white line. Whenever this spikes up really quick, you could see there's bouts of volatility that's spread to equities. So, we had a spike here, and we had a sell-off in equities here, and then of course we know what happened last week as well. So, if this stabilizes and at least if the yield comes in a little bit, even better, right? And then I think we've got a lot of opportunities. So, where do I want to look for opportunities for next week if some of those things that we've talked about? And we'll be watching those like a hawk in the trading room, and that's what I do on a daily basis is watch some of these things, and really for me. I did add to a couple things in options on Friday, but I have a whole watch list of areas that I wanted to get involved in my cash portfolio, which is basically 50% or 60% right now in cash, and I really want to put that money back to work. But as I said on Twitter, I don't want to. There's a couple times where I wanted to put the money to work last week, and EEM was a good example. And I said, hey, let's wait for a little bit of confirmation. Right here, I was looking for it to make sure it's continued to reclaim the 50-day moving average, and it failed. It did not. It was not able to close above the 50, and then it continued down. So it's great that we could get this at cheaper prices. I think, for me, I'll probably be starting an EM position on Monday as long as some of those factors that I mentioned hold up, because I think it's a much lower price than where I sold it up here. So I think that's good, and you've got the support of the 200-day moving average. I just want to make sure that we're progressing as we should be with those areas to watch. So EM is an area that I'm watching for next week. Uh, then also I think there's a great opportunity to get into some of these really nice market leaders. Amazon, right? I mean, Amazon had earnings. We don't have to worry about that. By the way, another thing that should help equities next week is a lot of those. A lot of names that have reported earnings, right? They're in quiet periods around earnings time, and the companies cannot buy back shares. So the buyback machines will be coming back online in many names that have already reported. So your big names: Amazon, Google, Microsoft, Netflix, all of those buyback machines should be coming back on, and should provide, just a little bit of footing, I think, to these equities. But hey, so the Amazon, kind of felt like the one of the last market generals that has been holding up very strong, broke down a little bit, and then it came back with a vengeance. So it held the 50-day moving average, and I like Amazon. When else have you really had an opportunity to kind of get into Amazon on the dip? So you got the 50-day moving average. If it reclaims the short-term moving averages, even better on Monday. A couple other names: Google. Google's all the way down to the 200-day moving average. So again, if we're wrong, if you start to scale into some of these positions, like I will be doing, not with humongous size, but I will at least be starting positions in Google versus the 200-day moving average. I mean, if it breaks 1,003, then you know that it'll be a small loser for you as long as you stay disciplined. And then if we turn over to some other areas, take a look at the PPH ETF. This caught my eye. Big inflow. So somebody said, "Hey, this is a great buying opportunity." And look at the inflow. This was 123 million dollars that it saw. This was just on. Looks like it might have actually been on Thursday, where the big volume was. But you got the 200-day moving average. So what's the biggest weight in the PPH ETF? So if we bring this up, and if we look at equity and then MHD, right? So AbbVie is the biggest weighting in this right now. So this is, I think, right now is kind of the darling of pharma right now. And oops, I want ABBV. So I will be structuring a name for this. Look at the strength in this. This didn't even get down to the 50-day moving average. It looks like it did, at least not on Friday, but maybe it did on Tuesday. And it's holding in there above the short-term moving averages. So I'm going to go through a little bit of last week's option activity as well. But one of the things that I noticed was a lot of buying in the semi space, which I'm going to get to. But really, you can't have I don't think it's being diversified to have 5 or 6 names in the semiconductors. I think having a name in the pharma space or biotech space, I think having a name in the consumer space, maybe like Home Depot, which reports earnings in a couple weeks. So I think that there's some good buys, and I don't think that I think you got a very good opportunity to get involved on the dip in areas, across equities and in different sectors. So I think Home Depot is a good one. Walmart might be another one as well. That is just below its 50-day moving average. So there's definitely, there's a nice home builder last week that caught some call buying, which is DHI. Caterpillar is another name that saw some call buying last week. So a lot of these charts are going to look the same, but really kind of gives you an opportunity to get involved. The other thing is, the RSI did not get oversold in some of these names, so I think that's also a good clue. But yeah, I mean, going to last week's option activity, which really becomes secondary when there's high volatility, right? When there's a big seller that's out there in SPY, as we saw $23 billion of outflows, some of these single name single name call buyers really become secondary. It's kind of like, hey, you write them down in your journal. You wait for things like I mentioned, where the VIX goes back to contango market, and then you kind of take a look at let the dust settle and then look for some of these places where there was call buying. Micron, this is not the prettiest chart, but I did add to my position again, January position. Also, if you look at the option prices, right, it's really difficult with short-term options right now with that implied volatility super jacked. But if you go out, one thing that you notice if you compare the implied volatility in option prices, such as if you go out to June or if you go out to January, those prices are not, the implied volatility is not super jacked up like it is for the February or March options. So it's a much harder time to be playing with options right now because they're so much more expensive. But if you go out, if you get a little bit outside of the short-term options, you'll see that they're still more expensive than they have been a couple weeks ago, but they're not as dramatic as as expensive as they are in the near term. So Micron, I'm out to January. Clearly, there's been some heavy buying that's been going on in July and in January. This we saw a couple buyers in Micron in the beginning of the week, but really on Friday, somebody came in big, a couple $1 million orders in July and January. So I like that type of buying, especially right now where you've got a market dip and you can give it time by going out to a little bit further for this market to work itself out basically, and get over those short-term factors that we mentioned. A couple other names were Intel. I think this was Thursday. We saw a nice call buyer in Intel. So Intel's been going sideways. They had a good earnings report, and you get a chance to get them much cheaper, than from where they reported earnings. Right? They got up to about $50, and they're sitting at 44. So you've got your support. I would say support is 42.67. You could use that bottom of value for the February value area, and that's an easy trade, I think, right now, because if it breaks, you're not losing your shirt. If it breaks support, and again, you have to be disciplined and say, hey, this is this is breaking the value area, and it could go down to the 200-day moving average. But for now, I think it's worth a shot. A few other names from last week. As I mentioned, just a lot of tech names. I'm not going to go through each one of these charts. Salesforce, we saw a lot of call buying in the beginning of last week. Cypress is another semi name. Analog Devices, we saw call buying in that name. Keep in mind, Applied Materials reports this week. Maxim, which I would say is a little bit more speculative. This is a name that ran up on a report that possibly someone was interested taking them out. That rumor was later denied, but notice the price has not really has held up pretty well above that 50-day moving average. And I think as long as you could play something speculative, as long as you don't commit that much capital, which is in my approach. Again, this video is just for information purposes. So I'm not giving any recommendations or anything like that. But when this is just something, these are names that I'm looking at and I'm looking to take risk in. FTC, this will be a name to watch that reports earnings, I believe, next week. A lot of call buying in this one that we've seen over the last few months. We saw some short dated calls in this one. We also saw some January calls go up in this one. Citigroup, I think, is of the bank names probably the name that I'm most interested in. They continue to put up big blocks in calls in this one. This one is kind of messy right now. I would say at the very least, maybe waiting for this to get into the February value area, 74. So anything above 74, I think is worthy of a shot. And then you have that support of the same level. But this one, I would be happy to wait for a little bit more confirmation in. And then just further before I get away from tech, so again, a lot of semiconductor names. TSM was another name. You could also just buy the SMH ETF, which we saw a big block of calls go up on Friday as well. It covers that whole group. Obviously, there's a couple other names in here that are not semis, Salesforce, but you kind of see what I'm getting at. Consumer names, MGM, they came in pretty with good conviction on this on Friday. This is another name that's gotten pretty beaten up over the last week. So again, you got the 200-day moving average, that white line support, and I think a great place to get involved. I took this trade on Friday. I've been in and out of MGM. I've done really well in this name. It's got more work to do. It's got to get above 34.69, but I think with the support of the 200-day moving average, something to that I think is interesting to get back involved in. In the pharma space, biotech space, Gilead saw some big calls that went up in the beginning of the week. They did report earnings, so this was post earnings. Someone came in and bought. Looking at this chart, you know, you have the 50-day moving average support. So again, as long as you're being disciplined and using a level, right, once you get into the trade, set an alert in case things go bad, and that alert I would put at 77, call it 40, just a little bit below the a few cents below the 50-day moving average, but I think this looks fine. It's a sideways looking chart. Give yourself some time with this one, and let it do its thing. And if it breaks 77.40, then maybe time to revisit and get out of that trade. That would be your support for that one. Small cap name that we're seeing a lot of buying in, speculative name NEPT. Also, AstraZeneca is another name that saw calls last week. In the industrial space, not a lot of names. The EMR was just for this week, but I think Caterpillar and CSX are two names that interest me. So that's about it for today's for this weekend's video. I'm going to be putting more setups in our Slack chat and specific contracts that I think are interesting and worthy of a shot. So if you're not a member of Tribeca Trade Group, check us out, tribecatradegroup.com, and I will be going through some individual setups with exact contracts that I think are suitable for some of these names that we're seeing the call buying in some other areas where I think are good dip buys. Thanks for watching the video, and have a great weekend.